Hello there, people. Welcome to another edition of Tip Tuesday. We are continuing our series on scary things when it comes to trading. And today could not have been planned any better. But what we've seen basically since we're Thursday, Friday of last week and leading up to today. And I'm going to show you a screenshot here in a second because some of you guys may or may not be charting and following this stuff like we do. But it has been a wild ride. I mean, absolutely crazy time in the market. There is, I mean, as much volatility as you could even imagine happening right now in the market. And today's topic is being scared of the economy and market volatility. And wow, are we seeing that play out? And not in a way that we would expect. At least there are certain things where you can kind of know going in, all right, I'm not sure what to expect, but I have a general idea. For instance, if I go to a haunted house, I don't really know what all they're going to do, but I have a sense that somebody's going to do a series of things that are intended to try to scare me. But at least I know going into it that that is my expectation and that is reasonable. So if I were to get scared in there, that it would make sense because I was walking into a scary condition where that was anticipated. For many of us, though, we don't really want to trade in an environment that we consider to be a haunted house, like where somebody could be jumping out to scare us right around any corner. That's not really an environment where I would think many of us are like, I can't wait to trade in something like that, where I don't have any clue what's going to happen from one day to the next. And it's just all these volatile, wild movements from, down 100 points to up 170 points to down 80 points to up 90 points to up 80 points. And there aren't many of us that are like, that sounds amazing. I can't wait to participate in that. In fact, most of us would be like, nah, you know what? Forget that. I'm just going to sit it out because I can't even make a reasonable plan with what we're seeing. It doesn't really seem to make sense, and I don't really know what to do. We talk about how this is a little bit like a dance, and you if you're like me, I don't really dance, and my moves are very very limited, and pretty much I can sway back and forth and kind of try to go the right direction. Like that's really the extent of my dancing abilities. So when I would go to a dance, I would have to wait for the slow songs to come on and then try to go dance. But if it was anything that wasn't slow, it wasn't happening for me. Well, Blair talks about, weather conditions. Is it sunny outside? Is it rainy? Is it snowing? And the market is like that. It has these conditions and we need to dress appropriately. So you can kind of take both of those analogies. They're both really good, and they both apply to where we are. And to kind of say, is this an environment that I want to be a participant? So there is a lot of volatility. There is a ton of movement. The economic conditions, at least currently at this moment in time, right now, do not align with what we're seeing in the market. And in fact, there are a number of signs that say that the market ought to be dropping, and it ought to be dropping substantially at this time. Instead, what we've seen is a really meteoric rise up in the midst of some pretty bad news. So there's not really good news out there. And if you were to scour the market and say, well, what is the economic news that could be driving this up move, you'll find very, very little. And in fact, like if you go look for some of the headlines, the headline might be, oh, it's earnings season. Okay, it is. But I don't know too many people that are out there going, I think this earnings season is going to be amazing. In fact, if we do have good earnings reports, I suspect that is mainly due to the low expectations from last quarter. It's like, having to high jump over a bar that's like 3 inches tall. I mean, hey, you made it. Yeah, it's not very great. A lot of people can do it, but congratulations, you're one of those people. So I don't really know why the earnings would be expected to be a positive thing. I don't see a lot of anticipation that moving forward our economy is getting better. That there are plans for it getting better. Gas is slowly starting to rise. Housing is starting to tail off. There are actually quite a few conditions out there that would lead us to think that, actually things could get worse. And you've seen some CEOs come out and say that. Of course, we have inflation that surprised and still was higher last month. So then that kind of tells us the Fed is probably going to have to act, even though what really people latched onto was, I think they talked about this thing called a terminal rate, where they were planning on not raising rates any higher once they reached a certain percentage. Well, I truly believe they said all of that with the expectation that what they had already done was going to tame inflation. Then, of course, when the CPI numbers came in, I think they kind of are going to walk that back. So the next time we're reading about them, I don't know that we will see that kind of certainty from them. I think they'll say, wow, things are still not good. We're going to have to keep raising these rates. And then we'll see at what point that finally takes an effect, and if the CPI numbers actually do finally slow down. But yeah, and I mean, when we're at 8+% inflation year over year, that tells us a lot about what's happening. That our things are getting more and more expensive. Unless you're just getting paid more, then that is kind of a scary time, because you've either got to put stuff on a credit card, in which case you put yourself in a position to say, great, I went out and bought this thing and now I paid for it twice and I only got one of them, and so a lot of people are going to find themselves in that situation where they're going to have these high rates on their credit cards, and they're going to try to have to figure out, well, how am I going to pay all this stuff off? Everything costs more, but I'm still out there buying stuff. How is that going to work? So when is that really going to come into effect? When are people finally going to say, you know what, I can't do this anymore. I can't really do this. And then to what extent does that impact us? What are they not going to be able to pay for? Is it these really, really, really expensive cars they've been buying? Is it their really, really, really expensive houses they've been buying? Is it food? Is it clothes? So where do we start to see a pullback where people say enough is enough? I can't afford this. I'm getting paid the same amount of money. I can't keep up with an 8% inflation. I mean, even if your company gives you a 3% raise, you're still well behind the cost of goods and services. Like it's crazy. We can't really keep up with 8%. So yeah, if you are scared of that, I mean, on the one hand, is there reason to be scared? Well, sure, right? If you're on a fixed income and everything around you gets more expensive, it does make it more difficult. Trading at least provides us with an opportunity, ideally when conditions are a little bit better, to try to take advantage of this. Now, there are some people out there that are loving the volatility because they have some advanced strategies and things that they can use that can really take advantage of a move like this and go out there and enjoy it. I'm sure the day traders are having a heyday as well. But for a lot of us just trying to do the regular trading thing, it's not very fun right now. So let's go out there and just share a chart with you so you guys can see what things look like and how wild it really has been recently. So if you haven't seen what the market's been doing recently, I think you'll be very, very surprised by what's happening. So let's put this up here, share screen. We'll share this one. Oh, why is it doing that? Is it flashing like crazy for you guys? That's what it's doing for me. I don't want it to do that, so we will not do that. Oof. I don't know why that was happening. Let's see if I can try something else. Stop screen. Stop. Oof, that was crazy. All right, I don't know why that's happening. Let's try it again. Was that being crazy for you guys out there? It was sure being crazy for me. That was really, 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 really crazy stuff happening there. I don't know. I don't know why that was doing what it was doing, but it was messed up. It was crazy. And I don't want us to have to do all that mess. That was wild. All right, we'll try this again here. All right, we'll see if this one is messed up less. Hopefully it'll be messed up less. That was a little crazy there. All right, now you should be seeing my screen. We'll drag this one over there. All right, much better now. All right, so this will give us an idea of what's been happening in the market. So we talked a little bit about economic conditions and how the market is kind of doing some weird things there. Now let's go look at the actual S&P itself. Now this is the S&P 500. It's what we use to kind of get a sense of what market tone is like. And I just want you guys to take a look at this chart here and just kind of see the volatility of just the last several days. What did it do here? All right, and on charts by tradeway, it'll be .SPX. That's your S&P 500. Let's zoom in here for a 6-month view, guys. Look at what I've been talking about here. So this was Friday, right here, the big red day. So Thursday, the market opens way down here, but then look at the size of this recovery. Our low on Thursday was 34. We'll call it 34.90. Our high was 36.85. Almost 200 point reversal. That is some crazy volatility. That is wild. Like that is, if you were concerned about volatility, then Thursday really messed you up, because Thursday was one of the wildest days we've seen in quite some time. And then on Friday, we go up early that morning. We hit the 20-day exponential moving average. We also hit this old diagonal resistance line. And then, of course, the market fell on Friday. And it fell, again, 37.10 basically to a low of 35.80. That's another substantial move in the opposite direction. So that's what, about 130 points from high to low. And then you think, okay, well, now it's just going to drop. So we're gonna fall from here. But we've had a massive move up after a drop down. So it's a drop down, massive move up. Then we have a move up followed by a pretty massive drop down. And then you think, okay, well, this is going to continue here. We're right here in our range. This is great. Just have it drop yesterday. But instead, look at what it did. It gapped up to open yesterday, went up and stopped at our line, and then gapped up again today. Now the S&P is moving up quite a bit this morning, and you would think, okay, now it's right up here. Where is it going to go? Is it going to stall out here at those recent highs? Well, it didn't quite get there. Is it going to go all the way to the 50-day? I mean, those are things that would make sense. So getting up to here, previous high, and struggling, that would have been fine. It didn't do that. Getting up to the 50-day, well, it didn't do that. Instead, what is it doing today? It's turning down here. So it gapped up, and now people are like, well, that's too far. After yesterday, which didn't make any sense, and then after today, which doesn't make a lot of sense, let's go ahead and sell so that, again, it won't make sense. And this is the time that we are currently experiencing the market. So is this something, in conclusion, that we should be afraid of? It's not something we should be afraid of. It's just weather that you don't like. It's conditions that you don't necessarily like, or you're not adequately prepared to trade in. In other words, if it were to be, cold and snowy outside, it wouldn't really make a lot of sense for me, because I get kind of cold anyway, for me not to dress up pretty warm. I need to put on a warm jacket. I need to put on some warm pants. Otherwise, I'm going to be freezing out there. But if it's hot, 100 degrees and sunny, I don't really need to be dressed up in my ski jacket and pants. It doesn't make sense. So what we have to do is realize, all right, I have the chance to stay inside. If I like the weather conditions, I have the knowledge and the skill sets to trade in these conditions, then perhaps I can take advantage and enjoy these conditions. But if that's not the case, I don't need to be scared of the volatility. I just need to realize these are conditions that I don't want to drive in. I don't want to go out and play in. I don't want to participate in this condition. I'm just going to stay inside for a bit until the weather clears up and becomes more of what I want to see. I'm going to wait for the right songs to be played. Whatever your analogy is, and you might have another one that applies as well, whether it's market conditions that you're saying, applies to weather conditions or, dance music or whatever. The point is, we don't need to be afraid of what the market is doing. The market is going to do what it's going to do. Sometimes it's going to make a lot of sense. Sometimes it won't. If it had kept dropping yesterday, it would have made a lot of sense again. It didn't. It did something really surprising. Today, it did something really surprising. Again, if it had dropped at resistance, we would say, well, that makes sense. I don't really know why it turned so quickly yesterday. It still doesn't make sense. But instead, it's doing what it's doing today. So it is a little tough. We don't need to be scared of it. We just need to recognize, is this a place where I want to participate in the market, or is it better for me to take some time off? So guys, we don't have to be afraid of these things, but we do need to recognize what's happening and decide whether or not we want to take advantage of this or whether it's time for us to enjoy some inside time away from the market, going out, doing something else, anything else besides trading when the market is so volatile and perhaps we're really uncertain as to what we ought to be doing, the types of trades that we ought to be in, and how we could personally take advantage of this. So that's our tip for today. Thanks for being with us, guys, and we'll see you next time.